Assalamualaikum and hi. We will be presenting financial report of Prestar Resources Berhad based on 5 recent years of financial statement which are 2017 until 2021. First, we take a look at company background. Since 1995, Prestar Resources Berhad has been a publicly listed company on Bursa Malaysia. It was established as a private company in 1984 and given the name Prestar Industries Sdn Berhad. In 1995, it underwent a conversion to become a public limited company and was listed on Bursa Malaysia's second board. Prestar successfully shifted its listing status to the main board of Bursa Malaysia on 1st October 2003. The three business segments of the company were manufacturing, trading and investment. Investment holding, long-term investment in quoted shares, and property investment are all activities of the investment segment. Hardware and steel-related products are sold in the trading segment. Products related to steel are manufactured by the manufacturing segment. Today, Prestar Resources Berhad has evolved into top steel production and processing group with a concentration on the following main activities as we can see here. Next, we move to vision of Prestar. Prestar want to give client high quality goods at competitive and reasonable price. This could only be accomplished with the close cooperations and understanding of all levels of staff, which could lead to improved teamwork and operational efficiency. For the missions, Prestar is committed to producing steel products of the highest quality with an emphasis on continual improvement in order to satisfy customers through high quality goods and services, while also paying careful attention to value creation through scope, schedule and cost control.
Assalamualaikum. Right now, I will continue to present on the financial ratio analysis. For this section, I will cover for liquidity and activity ratio. Okay, let's start with liquidity ratio. Basically, liquidity ratio are key financial ratio used to determine a company's liquidity, which represent its capacity to pay the short-term debt obligation without the needs of additional financing. This ratio consists of 4 main ratio, which are: first, current ratio. The current ratio compares all of the company's current asset to its current liability. From here, we can see that the current ratio of Prestar Resources Berhad shows that there was a decrement ratio in the years 2017 to 2018, and after that, the ratio is increased in the year 2019 to 2020. But it started to decrease again in year 2021. Here, it appears that the company has the greatest performance for the year 2017 with ratio of 1.48 times. In this matter, it means that the company is managing to pay its 1 ringgit of current liabilities with 1.4 ringgit current asset. Otherwise, it indicates that the company has the lowest performance for the year 2018 with the lowest ratio with 1.26 times. Second, quick ratio. The quick ratio measures the amount of liquid asset against company's liabilities coming due within a year without including inventories. Prestar Resources Berhad has maintained a quick ratio of less than 1.0 times for 5 consecutive years from 2017 to 2021. From that, the company does not have enough liquid asset to satisfy its current liabilities or debt. From here, it shows that the highest ratio is of 0.92 times in the year 2020 and the lowest is 0.65 times in year 2021. Even though the year of 2020 is the highest, they still do not have enough liquid asset to pay off the current liabilities, as it can be indicated that the company has 0.92 ringgit liquid asset for every 1 ringgit of current liabilities. Working capital. It refers to the amount of money available by a company in short-term liquid asset. From here, it can be said that the working capital for Prestar Resources Berhad shows a decrement starting from 2017 to 2019, and it started to increase back in year 2020 to 2021. In this case, it can be said that the highest working capital is in the year 2017, while the lowest is in the year of 2019. Overall, the company are managed to have positive amount for all those 5 years, and it shows that they are able to pay their short-term liability. Fourth, working capital turnover. It compares the depletion of working capital to the production of sales in a specific time period. The working capital turnover for the Prestar Resources Berhad is same increase during the year of 2017 to 2018, and after that, they decrease until 2021. Here, it can be indicated that the greatest performance is in the year 2018 with 7.76 times. So, it can be analyzed that for 1 ringgit, working capital can produce RM 7.76 in revenue. However, the lowest performance is in the year of 2021 with 3.61 times. Next, We will continue to the activity ratio. It is refers to a sort of financial ratio that shows how the company efficiently use their asset on its balance sheet to produce sales and cash. Generally, there are two common types of activity ratio, which are: first one, account receivable turnover. It measures how company is able to manage their credit sales and convert their account receivable into cash efficiently. For the Prestar resources Berhad, it shows that there was an increment towards their receivable turnover starting from the year 2017 to 2019, and after that, the ratio has decreased in the year 2020. However, it has increased again for the year 2021. From here, it shows that their most efficient operation in collecting receivable is in the year 2021, as during the year, the ratio is in the highest with 3.60 times. Otherwise, the less efficient the company managed their receivable is in the year 2017, as during the year, the ratio is in the lowest among all of these 5 years ratio. Second, inventory turnover. It refers to a ratio that is measured to indicate how efficient a company can manage their inventory. The inventory turnover ratio for the Prestar resources Berhad shows an increment for 4 consecutive years, starting from the year 2017 to 2020, and it been reduced during the year of 2021. From here, it can be said that the highest ratio is in the year 2020 with 3.35 times, while the lowest ratio is in the year 2021 with 2.25 times. From here, it can be analyzed that the company most efficient in managing their inventory is in the year 2020, as during the year the ratio is the highest. Otherwise, the less efficient in the year 2021, as the ratio is the lowest.
Hi, Assalamualaikum. So now I will proceed with the leverage and profitability ratio. So for the profitability ratio, as you can see that the net profit margin is low from 2018 till 2020, and 2019 is the lowest net profit margin with 1.67%. This is because the company's operating costs increase at a faster rate rather than the revenue, which will result to a poor net profit margin. But however, as you can see that the net profit and sales is the highest in year 2021, which also result to highest net profit margin of 17.67%. From this, we can say that the company start to have more profit and better control over its cost compared to the previous years. And next is the ROA, where we want to measure the management's capacity to generate income using its assets. So according to this analysis, the ROA decreasing from the year 2017 to 2019. So we can say that the company had difficult time making profits from its investment of asset in that year, and the declining ROA might be due to poor investment decisions, and also the company's profits are shrinking due to the declining of its sales, which also makes the company cannot generate enough profit to justify the cost of purchasing those assets. Like we can see in year 2019, where the net income is in significant low amount of profit. But however, there's impressive increases in year 2021 with ROA 14.85%. So we can conclude that the company is increasing its profits with each 1 ringgit invested in the company's total asset. Next is the ROE. So we can see that there's a declining in year 2017 till 2019, and which decreases to 2.41%. This indicates that the company's production efficiency is declining, and this decline negatively impact to the common stockholder. But however, there's significant changes in year 2021, where it had the highest ROE, which is 26.7%, and this higher return implies a greater return for the shareholders. Next, for the debt ratio, we look at the ratio 2017 slightly past the 50%, where this means that the company had used a high amount of debt to finance its asset. But somehow, we also could see consistency below 0.5 from the year 2018 till 2021. This is because their assets have decreased during the previous year. And then we can say that the company also started to use lesser debt and more on equity in year 2021, because the total asset is increased, but yet in the ratio still lower than 0.5. So we consider that it is a positive sign of the company's position, as the company has a lesser financial risk. And the last one is the debt to equity ratio. So we can see that the company's DE ratio is in good positions, with the result approximately 1.0 times, and the highest ratio also with around 1.05 times in the year 2017. This indicates that the company is taking advantage of debt financing to expand and grow the business. So according to this ratio, this company can still obtain the financing, but however, a higher DE ratio might make it harder for the company to obtain financing in the future, and this also can result to earnings volatility as the effect of additional interest expense. So that's all from me. So let's move to the next presenter.
Next, we move to the comparative analysis of the balance sheet. According to this graph, we can see the comparative analysis for year-to-year changes for Prestar Resources Berhad balance sheet from 2018 to 2021 and the base year of 2017. From the graph, the statement and the trend present data, it is evident that the company significantly expanded its property, plant and equipment in 2021, where before there was a decrease in 2020 and 2019. Such additional machinery leads to an incredible improvement in the production capacity of the company during the year. The total assets are decreased changes of 19.5% in the 2019, where from 93.8% in 2018 to 74.3% in 2019, and slightly decreased in 2020 at 73.06%. The total asset in 2021 increased highest than previous year at 110.84%. Next, I will present on comparative income statement. There has been an increase in net sales of 72.61% in 2021, while the cost of goods sold had increased nearly 63.93% in 2021. So from the graph, we can see that the comparative income statement reveals the resulting in an increase in the gross profit of 124.56%. And it was the highest change in gross profit in that year compared to the previous year of 47.02% in 2018, a decrease of 28.46% in 2019, and climbed up to 47.76% in 2020. As the increase of the gross profit in 2021, the financial profit for the year was the highest increase in the year at 187.65%. Next, I will explain on common size analysis of the balance sheet. The total assets of Prestar Resources Berhad have an inconsistent trend from 2017 until 2021. As we can see, the company property, plant and equipment has decreased from 2017 to 2018 and then increased in 2019 until 2020. While in 2021, it has decreased again to 15.72%. Similarly, we can conclude that total non-current assets increase when company property, plant and equipment increase, and the highest change in total non-current asset is at 50.34% in 2020. It indicates of poor liquidity since a large amount of cash may be needed to support ongoing investment in non-cash asset in that year.
Next, this is the common size analysis of income statement for Prestar Resources Berhad. As we can see here, revenue is used as the basis of the income statement. Change in cost of sale increased, making up and down trend in 2017 to 2020 and decrease in 2021. Next, the gross profit in 2021 is the highest, which is 24.56%, while in 2019 is the lowest, which is 6.66% among the 5 years. For selling and distribution expenses, Prestar used the highest percentage in 2017, which is 0.87%, and the lowest percentage in 2021, which is 0.52%. Administrative expenses have an increase in 2017 to 2020 and decrease in 2021. For taxation in 2019, the common size percentage is lowest, which is 0.38%. This indicates that Prestar do not pay more tax for their operation compared to other years. The profit for the financial year shows 2021 has the highest percentage of profit, which is 17.67%. This is because Prestar consumed less selling and distribution expenses than other years. Lastly, the total comprehensive income shows that 2019 has lower percentage, which is 1.67% compared to other years.
Next, I will explain on the company's performance from year to year. I will discuss on the financial ratio analysis, comparative analysis, and common size analysis. For the financial ratio, the first ratio that we calculate is liquidity ratio. Liquidity ratio consists of current ratio, quick ratio, working capital, and working capital turnover. 3 out of 4 ratios that we calculate shows the good performance. We can conclude that the company have the good performance of liquidity ratio as the current ratio is more than 1, positive working capital and working capital turnover ratio. However, for the quick ratio, the performance from the year 2017 to 2021, we can say that the company is bad and does not have the sufficient liquid assets to pay their current liabilities because the quick ratio for this company is lower than 1. The second ratio is activity ratio. For the activity ratio, we calculate on the receivable turnover ratio and inventory turnover ratio. We can say that the receivable turnover ratio for this company is in good performance. As for the year 2020, the ratio decrease might be due to the COVID-19 pandemic. However, it increased back in the year 2021. Then, for the inventory turnover ratio, the ratio decreased to 2.25 times for the year 2021. We can see that the company having a lower sale and unable to convert the inventory into cash as quickly as before. The third ratio is leverage ratio. We calculate on the debt ratio and debt to equity ratio. We can say that the leverage ratio is in good performance as the debt is lower than 50% except in 2017, which is 51%. Same goes to the debt to equity ratio. We can identify that the company's performance is considered as good by the industry standard because all the ratios are less than 1 except for the debt to equity ratio for the year 2017, which is 1.05 times. The last ratio is profitability ratio. As for overall, the Prestar Resources Berhad has a good profitability ratio because there is an increment in 2020 and 2021 as the net profit margin, return on asset and return on equity keep improving. For comparative analysis, we can see that Prestar Resources Berhad is well performing compared to the previous year, which is from 2017 to 2021, where there is an increase in asset amount. Their non-current assets grow year after year. The percentage change is greater than 100%, which is the highest at 141.88% in the year 2021. Other than that, the company had a decrease in current liabilities from 100% in 2017 to 51.89% in 2020 and had an increase to 101% in 2021. Prestar Resources Berhad also shows that their assets are higher than their liabilities in 2021. Next, we proceed with common size analysis. The total non-current asset for the year 2021 is reduced compared to previous year because the value of non-current asset is decreased throughout their outstanding holding periods. As for the total equity, the percentage has increased from 48.66% in 2017 to 59.80% in 2020. Then, the percentage has dropped to 52.85% for the year 2021. This is due to the share capital and reserve which they increased from 2017 to 2020 and decreased in the year 2021. It shows the same movement as the total equity. Lastly, for the total liabilities, the percentage has decreased from year 2017 to 2020. Then, it increased for the year 2021, which is 47.15% compared to the previous year, which is only 40.21%. This is because the borrowings percentage, where the company's borrowing is dropped from year 2017 to 2020. But for the year 2021, it increased by 8%. The recommendation that we can suggest, such as for the liquidity ratio, the company can improve on quick ratio. Some of the ways the company can use to improve the quick ratio, such as the company can pay the debts or liabilities immediately. Besides, the company also can reduce the period for collecting invoices. A shorter collection period can improve a company's incoming cash flow. Next, for the activity ratio, the company can improve for the inventory turnover ratio. The ratio dropped from 3.35 times in 2020 to 2.25 times in 2021. To improve this ratio, some recommendation to the company is the company need to better forecast in the future. The company needs to accurately predict what the clients demand. Besides, the company also can reduce the purchase quantity from suppliers, create a strategy optimum purchase if possible. Lastly, for the leverage ratio, the company can improve in debt to equity ratio. The company can increase the sales and generate more profits. The increase in sales will be utilized to reduce the debt proportion. As a conclusion, Prestar Resources Berhad considered as a successful company as they able to retain in this industry for more than 38 years. In a business, having fluctuation is a normal thing for business operation as some factors are uncontrollable such as economic changes, inflation, natural disaster and more. The company should improve and take precautions steps so that they able to get the profit and sustain for upcoming years. I think that's all from us. Thank you and Assalamualaikum.